Hey guys, Alchemist here. Welcome to today's video where I'll be breaking down these three trades and showing you how you could have got involved on the 1 minute. So we'll go ahead now and clear all the drawings and mark them out together. So as always, we will be starting off with a blank weekly chart. And if we have a look at this here, this was the previous supply that we were trading from. And we can see that we've actually wicked above. And when wicking above, we've actually tapped into this supply zone, which is a little bit higher. And we've had a very nice reaction out of here now. So we can see here that this here was a sweep. We haven't had a body close above. So this supply hasn't yet failed. This here is just a sweep at the moment. And when we've set this new high, we can now find this here as a demand flip, which has actually flipped this supply when we have actually broken above, even just with a wick. So what we can see here is we would have had this as the flip. And then that was actually mitigated by these buy to sell wicks here, which we can see price is actually now tapping into as well. So this here would be the demand as a demand chain from here. And this up here will be our supply. So that's all that we need to do on the weekly. We can actually get rid of these zones as well, just to keep it nice and clean. And we can jump down to the daily time frame. Now on the daily, if you have seen the last couple of videos, it still has been the same daily boss. We've swept both the high and the low, but we haven't yet created a new breakup structure. So both of them are just sweeps, and this remains to be our daily boss. So here we've got multiple sweeps below, but price has failed to close below. So this here is still the daily low. And up here, so this here was the daily high, and I'll show you why. So once we've come here and set a bearish pullback greater than 110 pips, this solidified our daily high. And then again, we've wicked above twice and swept, but we haven't actually closed above to make a new daily boss above. So this is our daily high. And we'll go down to the 4 hour. So at the time, we had this as our 4 hour breaker structure. This here was our 4 hour boss. And the 4 hour high was up here. High. And I'm just going to get rid of this daily high, push it to the other side just to keep it nice and clean. Beautiful. And I'll do the same with the daily low as well. And then once we came down here on the 4 hour and set a bullish pullback greater than 90 pips, we confirmed our 4 hour low as this low here. And as we can see at the time, we hadn't yet broken below. So this here was our 4 hour low. So we can drop our premium and discount from this high to this low. And we can have a look at some zones from in here. So we can see we have these buy to sell wicks, which again was swept. Swept here, which gave us this nice reaction away. Then we closed above, took more liquidity, went down and went for a further sweep for the liquidity resting below this high here. So we have another sweep here as well. We have the extreme, and there's some few zones here as well, but we don't need to be marking them out just for this video because we are looking at something down here, but we can start to mark out the demand zones as well. So firstly, we'll take the extreme, and we can see the extreme is mitigated straight away by this inside bar. Then we can see this wick here mitigating the inside bar, which comes to this zone, which we then have these very minor buy to sell wicks, which did give us a slight reaction in terms of a bearish pullback from this supply. Then we also have this inside bar above here with a lot of imbalance and a lot of momentum after it as well. And we have the unmitigated portion of this wick. Beautiful. In terms of where we're tapping into here, so we can see the extreme here has this unmitigated portion of this wick. Just refine it a little bit more because the next candle did trade a bit lower. So if we look at the part that this candle here had not yet touched, this is what price then went for. And this is what's given us this reaction here. Again, as we zoom in, we can see we have very, very minor buy to sell wicks here as well, which we can see were swept and gave price another nice bearish reaction here as well. And those minor buy to sell wicks interacted with this wick here. And we can see we had a demand chain failure. So if we were looking at a demand chain in this case, we would be expecting price, if it were to remain bullish, to react here and set a new higher high. But that didn't occur. And once we had a body close below this low, we actually had a demand failure at this point here. right? So we can sort of start to expect now that the 4-hour low should be targeted because it's failed its objective in setting a new high, right? And it is actually still bearish on the 4-hour, so we're expecting order flow to remain bearish, set a new 4-hour break of structure below, give us a pullback, then take continuation shorts, potentially to this weekly demand below here as well. So that's everything that we need to do on the 4-hour. We can see here as well that we have this as a supply. Hasn't yet set a new lower low, but it has interacted with this sort of like a chain here as well. This zone did set a new lower low. And we'll go to the 15-minute time frame. So this was very, very ugly price action here. This is when we had some news releases occur. And then at the time we had this low here, which gave us a bullish pullback greater than 22 pips. What we'll do is we'll just follow the breaks of structure. The trade is a little bit further away, but we'll just follow it from this point here. So once we had this here as our 15-minute low, because it had a bullish pullback greater than 22 pips, we wait for 2 times body closes below. So this here was the first body close below. The next bullish candle closes above. So we haven't yet had a boss. The boss occurs as per my rules when this bearish candle closed below. If you haven't seen my 15-minute market structure video, I will put a link in the top right-hand side corner. You can go ahead and watch that after you finish this video here. So this point here, this was our 15-minute break of structure. So the highest point is going to be our 15-minute high. And then as price came down, we set a 15-minute low when we had this bullish pullback greater than 22 pips. So then this became our 15-minute low. And then we had 2 times body closes below here. So this became our new 15-minute boss, making this point here our 15-minute high. And then we had 2 times body closes above again. So this became our 15-minute high. Well, it hasn't yet because we need to have a bearish pullback greater than 22 pips. So this was our 15-minute high at the time, 15-minute boss. The lowest point below here is going to be our 15-minute low. And we're waiting for a bearish pullback greater than 22 pips. So we can see here in this massive bearish candle, this was actually when the news came out regarding Australia's unemployment rate, which unfortunately was higher than expected. And they were expecting a lot of new jobs to occur, to be available in the market, and there were actually a lot less. So that's what's caused this bearish pushback here. And then once we, of course, had this pullback, which is much larger than 22 pips, this point here confirmed our 15-minute high. Then when we had 2 times body closes, so this gold candle, and then the inside bar above closed above, this became our 15-minute boss. So we can get rid of the previous 15-minute boss line so that we don't get confused. We now adjust our low to the lowest point below the newly marked 15-minute boss line. And we're waiting for a bearish pullback of at least 22 pips to confirm our new 15-minute high. This one got very, very close, right? But we are systematic traders and we must follow our rules exactly. So 21.6 is less than 22. Therefore, this was not our 15-minute high. And it's great that we have this rule, because if this wasn't, we were looking to take a short here, we would have actually taken a loss. But we knew that our 15-minute high had not yet been set. So we're still waiting for that bearish pullback of at least 22 pips, which we do get here. Okay, 22.1 pips to the low of this candle. So now we have confirmed our new 15-minute high. Beautiful. This was that 4-hour range. I'm just going to remove that just for the sake of marking up the 15-minute structure. And we can drop our premium and discount tool, and we can identify what's going on within this piece of price action. So starting from the extreme, we have this as a supplier. Okay. If we were to take it as the whole candle without first refining it, we can see then that gets mitigated here, which then is mitigated by this next wick. And so this here is now starting to create a supply chain. In terms of demands, we have the extreme. Then if we look at this here as a supply, because it's set a new lower low, we've interacted, we've left this inside bar in the next candle. So we can take this candle here to the low of the inside bar, which we can see was mitigated here. I'll just neaten this up and make it a supply zone. And then tapping into this, we have this as a demand. Okay, we can see here that this low is lower than this low, and this lower low originated from here as a supply zone. And if we take this supply zone, we can see that it was mitigated by this wick here. And when interacting with this wick, I'll just zoom in for you guys. We can see this candle here as a flip. All right, so this demand interacts and mitigates the demand below. And then here, it has flipped this supply when we have this body closing above. So we can see that this body closed above this wick here, which mitigated this supply, which set a lower low than this low. Right. So we really have to be very specific with how we're marking up our zones. We can then see if this here fails, we can start to see that demand failure, and we can start to look to take shorts into discount of the 15-minute range. The other thing that's occurred is we have turned bearish in terms of order flow. So we've set an inside bar here. We've taken the high, and then the lowest point, we've had a body close below. So we're bearish in terms of order flow. We're bullish in terms of structure, but we haven't yet fulfilled a pullback into discount to take continuation longs. So the idea here is to take a short when it's available to potentially target something lower in the leg. Now, looking at this here, if you've watched any of my videos, you'll know that interaction is something which is extremely important for us to see. And if we look through this whole leg, right, if we look at these buy to sell wicks, right, they don't interact with anything at all, right? They do interact with this as an overall supply range, but that's not what we mark on the 15-minute. We need to see a 15-minute POI. So this here would be the 15-minute POI, which this zone itself has not interacted with. And if we look a little bit lower, we do have these very minor buy to sell wicks here as well. But again, they have no interaction at all. And the ones below also do not have any interaction. But when looking to frame up a short, especially because 15-minute structure was bullish at the time, we're not really going to be targeting all the way to the bottom of the 15-minute leg. Although these demand zones did set a higher high, don't have interaction, we can be a bit more conservative with our targets and not try to hold them all the way to the bottom and risk having a major pullback, which could come back out and take us out at break even. So I'll mark this zone out here. We'll mark this zone here, and we'll see if this demand here fails, which will be the first indication. Well, the first indication we were going to go bearish for a little bit was this order flow change. Then if this demand here fails from this demand chain, we could potentially expect that price will want to fill a lot of this imbalance and come to a demand zone lower here. The other thing to keep in mind is on the 4 hour, we do have a targeted low. So we are having that overall higher time frame objective that the 4 hour low is going to fail. So if we play another candle along, we can see here that we close below. Okay. I'll zoom in. It was very minor, but regardless of the fact, we did have a close below. So this point here, this demand has now failed. If we take that as a demand failure, we can take this here as the supply, which flipped that demand. So this here is a supply zone. And if we're looking to take shorts, ideally we'd want to be taking shorts from up here as well, having all this imbalance. That's not how I was meant to draw that. Let's draw it a bit better. Cool. So we do have a lot of imbalance here, which price could potentially come back out to fill up. However, if we do come to this supply zone and we have one of our liquidation models as well as our entry model, we can potentially start to look for entries here. So we'll drop down to the 1 minute and we'll see what occurs as price comes back to this zone. Okay, so we can see here this body close below the demand to the left, and we'll just play price along until it comes back up. Beautiful. At this point here, we have taken sufficient liquidity. And now we're waiting to see if price will give us a 1 minute bearish change of character, which we do have here. Wrong one. And then we have a body closing below. We have this as the demand. This flip here is not very nice at all. The Halo candles formed, it didn't sweep liquidity, it doesn't get any inducement as price comes back up to it. So we were looking at the extreme at this point here. So if we take 25% of this zone, we can wait to see as price returns to here. Right, we can set a limit on 25%. And as you're about to see, this zone here was very small. So if you've seen my videos, you'll know that we like to cover the high by at least 0.3. So the high here is 180, so at least 183, and that's only using a 1.8 pip stop loss. So we'll just give it a little bit more breathing room, and we'll use a 2 pip in this case. We don't need to use a 2.5, because if we get swept here, it's likely that price was trying to fill this imbalance, and we'll come to the higher zone here, which will then wait for another further confirmation before taking a continuation short. So there would be our entry. We'd be having our partial system, which will be 25% off at 4R to cover our risk. Beautiful. And then this here, this demand is now mitigated. So the next unmitigated demand were those buy to sell wicks that I showed you earlier on the 15 minute, and we'll have a look at it again as price comes here. So this here was a trade for 16.75R if we do get tagged in and it works out. So let's have a look at the reaction we get. So this is exactly what we like to see, right? Price aggressively tapping in and aggressively tapping away, or a V-shaped reaction. And then we'll have our partials off pretty quickly. Beautiful. So as you can see here, this here was risk-free in 18 minutes. And then it did take a little bit longer. If we just play price along, you can see that it runs to our TP. I think it was just under 2 hours at this point. Beautiful. So we are tagged out here. And that was for a total of 1 hour and 28 minutes. So we'll do a full calculation at the end with the partials as to how much it could have been. But if you're not using a partialing system like this and you're just doing you're holding your full volume to the bottom, you can see here that this would have been 16.75R. So of course, if you're using 1% risk, it's 16.75 risk, or if you're using 0.5, it would be 8 point something. So that's a very, very nice trade here. I did not take this trade. So this was at 11 p.m. Sydney time, 11:02. So currently, for this week that's just passed with my FTMO challenge, I was only looking at Asia, and we literally did not get a single setup in Asia, which has been a consistent theme, unfortunately, for the past few weeks. So from this coming week, from Tuesday to Thursday, I will be trading London as well as Asia, and sorry, from Monday to Thursday. And so hopefully I will be having some actual trades to show you with MT4 results, with the FTMO and everything else. So you can see that I'm not just marking these up, that I also do execute on these trades as well. This one personally, I did not take. So here we go. This was the first trade here. Now, if we look at this piece of price action and we look at potential scaling opportunities, what we can see here is price has gone sideways for a long time, and then we've had a nice sweep. So we've had a very nice sweep above all these highs. Not only have we had a nice sweep, we had a very, very nice push out with a lot of imbalance here. So depending on how you'd want to do this, we'll show you the different circumstances if you were just to play a limit order, or if you were to wait for another confirmation. Both of them, you do get another opportunity to get in. But we are also going to have a new 15-minute breaker structure. So I'll go through it all for you here. If we have a look at the 15M, so these were those buy to sell wicks that we were targeting. Again, they didn't have interaction to the left. However, I don't want to be too greedy and hold the trade all the way to the 15-minute low. As you see in the next candle, the next couple of candles, that does actually go. So it could have been 24R, but we're not greedy traders. And we want to make sure that we can get in and out in a reasonable amount of time, so we're not holding our trade for too long. So this here is that 1 minute zone that has swept liquidity. We'll come back to it. But what you're going to see here is we've had 1 times body close below, and then this one closes back above, and then this one closes below. So when this second candle here closes below, we have a new 15-minute boss. So the 15-minute boss is here. The 15-minute high remains to be the same place because it's the highest point above the 15-minute breaker structure line. We can get rid of this premium discount because we have a new range, and we'll get rid of the 15-minute boss as well. And then we'll wait for a 22 pip bullish pullback to confirm our 15-minute low. So this here, we certainly get it, but I'll measure it anyway. So there you go, it's 46 pips. So at this point, we would set our 15-minute low. Okay, and then if we look at this overall range, we can see that that zone that was on the 1 minute, which we'll go down and have a look at now, is very, very nicely in premium and has a lot of imbalance and a lot of momentum pushing out of it. So we could potentially see continuation shorts from here now that structure has turned bearish. We are going to be bullish in terms of order flow. So here we've taken this low here, and then with the high of the inside bar, we've closed above. But based on the flowchart system I've created, we are still able to take shorts from this particular zone. So this here would be a chalk up. And as price comes back to that zone, you'll see how accurate this system is. So we'll go down to the 1 minute. I know a lot of people are a bit riskier and are okay with playing limits. Personally, I would definitely wait for a further confirmation on the 1 minute, with giving us another 1 minute change of character before taking this short. But what we can see is if you do like to be a bit risky, and considering you'd already made 16R, so you could afford to lose one, you can play this one here with a 2.5 pip at 25% of the zone. And if we just play price forward, again, here we are about to set some nice inducement. So we have some inducement there for liquidity. Price comes back up. Just want to draw this out to show you how beautifully this was tapped. Okay. So then price comes in, takes 25%. In terms of targets, depends how you'd like to play this. So again, everyone has a sort of different system in terms of how they would want to manage their TPs. So if we look at this here, we have a supply. So into here, we have this as a demand. This had already mitigated this demand. So we could look at this candle here as the next unmitigated demand, which also has inducement above it. So you can play it till there. Okay. So I'm going to show you this. I'm also going to show you if you were to play it all the way down to the extreme as well. Because given that 15-minute structure had turned bearish and we're expecting the 4-hour low to also go, if that's in your trading plan, then you could potentially be holding it to here, or at least just holding a 10% runner or so as well. But personally, I would take full TP here. So that would be here. And we'll go to the 1 minute. Right. And if you weren't going to be that risky and you don't want to play a limit entry, because personally I wouldn't have just played the limit here, we can see where we'd be able to chalk down. So this here is just an inside bar. So on the 1 minute, that's not sufficient for me to be using as a change of character. So personally, I'd want to see this whole range fail first. And this here was a 2.5 pips. So let's see where your partials would be at 10 pips. 25% at 4R. And then we can wait to see if we do get a chalk down. Okay, so we're interacting with the demand. And then here we have a body close below. Beautiful. And if you did get in on the extreme here because you wanted to play that with your risk management, given that you'd already made 16R on that first trade, then after this had already been after you'd already had your partials taken off here, you could potentially look to scale in your position as well, because this here would be risk free. Now in this flip, we have a very, very nice zone that has swept liquidity. Okay, so take the buy before the sell. 25%. And so if you didn't get in here and you wanted to wait for a further 1 minute confirmation, you've had that. Okay, your order flow has then turned bearish again. So you could be placing your limit here with 2.5 pips. And then you can have the same TP, or you could also be running it to the low as well. Personally, I would just have it here, but we'll also show you if you were to play it all the way to the end. And then as you see, you'd be tagged in beautifully, exactly at 25%. You'd be actually in and out of this trade within 1 minute. Okay. So within that 1 minute, you would have made 6.5R, right? And then you probably wouldn't have even had time to take your partials off. With your trade assistant, you should have already had that set. But then if you were going to be playing both of these all the way to the 15-minute low, sorry, not the 15-minute low, but just the demand in discount here, you can see that both of these trades would go up to 12 and 15R respectively. And you can see that that gets achieved in not too long at all. Your partials would be off very, very quickly, and then price trickles down a little bit. Maybe we'll go up to the 5 minute. And there we go. So in total, if you got in at the flip, this here would take you 3 hours. And if you got in with the limit, that would be 4 hours. Okay, so this was here the first trade, which was at 11 p.m. This one here was at the end of the New York session at 6 a.m. And then this one was a little bit later at 7 a.m. So personally, I'm only trading, I was only trading Asia session. So that's between 11 a.m. Sydney time and 4 p.m. And this coming week, I'll be trading both Asia and London. So the next time you see me on one of these YouTube videos, it'll be an actual trade that I've taken and not just a back test. But there you go. So that's how you could have framed up these trades. Again, if we go to the 15-minute, you can actually have just played this all the way down to the unmitigated portion of this wick as well, right? Depending on how you like to manage your TPs and everything else. If you're a member of the course, do not do this, right? We have very strict rules as to where we're targeting and everything else. But if you did just want to hold a runner, you can see that that would be achieved very nicely here as well. So I will calculate all of this for you later, and I'll put it in the thumbnail of the YouTube video as you watch this. And if you do have any questions, let me know. As mentioned, this coming week, I'll be trading both Asia and London. So the next one of these videos you'll see will be an actual trade breakdown that I've taken with MT4 stats and everything else to prove it. So I hope you guys have an incredible week coming up. Enjoy the rest of your weekend, and I'll chat to you in the next video.